Hey guys, what's going on? Welcome to another episode of the Smart Money Sundays series. Hope you all are doing well and are excited to start the 2021 trading year. We did take about a month off due to holiday and low volume in the market, but we are resuming tomorrow, January the 18th. All right, so this is the first Smart Money Sundays of 2021. So let's get going. So I know you see a lot of boxes color coded differently. All right, and this is not meant to confuse you. This is meant to help you in your top-down analysis, your multi-time frame analysis that we teach strictly in the course and the VIP. All right. So as we can see, these orange colored boxes, all right, are they represented by the monthly or daily time frame? So daily to monthly time frame, daily, weekly, monthly swing points. All right. Higher time frame, they're easily identifiable. We have a lower low, a lower high, lower low, lower high, lower low, lower high, lower low. Okay. We're looking for a lower high. This is our last point of supply here. Okay, this is our supply region that has not been tested. As we can see here, as I zoom in, we have not tested the last up thrust before the big leg to the downside. Okay, so I highlighted that and I dragged it over all the way so we can see exactly where we need to come back into. I'm thinking around 1.38, 1.39, 1.4 before potentially making a move back to the downside to continue with the higher time frame sequence of a bearish leg. Okay, so zooming into this, obviously we can have an uptrend within this singular leg. And that's exactly what I'm indicating right in here. Okay, so these yellow boxes, I guess you can call them the daily time frame swing points: higher high, higher low, higher high, higher low, higher high, higher low. We're looking for a higher high. So let me just map this out here. One leg, two leg, three leg, looking for that fourth drive into the high before potentially pushing back to the downside. Okay, so within this leg right here, we have a lower time frame uptrend. Okay, so this is why top-down analysis, multi-time frame structure, identifying your higher time frame and lower time frame swing points is going to be very, very important. Okay, highlight them with the boxes so you don't get confused. All right, now we're going to go into these little green boxes. So I'm going to scale into the 4-hour time frame here. This is our 4-hour trend, and we're currently in this leg. We should not be trading short unless you are trading on like the 5, 15, or 30 minute and you find a short opportunity. Overall, we are still in a bullish leg. Okay, so we still need to be looking for long trades. All right, green boxes. This is the 4-hour uptrend, higher high, higher low, higher high, higher low. We're looking for a higher high here, which we got. So technically, you can classify this as our new higher high. However, we did not take liquidity here. These are relatively equal highs. There's liquidity above this level, and we will be taking that. What I'm hoping for is I'm hoping for some sort of retracement before continuing long. Okay, so we can see here we have even a smaller time frame structure within here. Okay, all right. So we have this smaller time frame structure. Are we going to respect this previous swing point here like we did here? All right, so this was our demand level. As we can see, we pushed down, created this indecision doji candle, and then a pushback to the upside, a bullish candle, 1, 2, 3 pin pattern. Okay, we reacted solely off of that level, wicked into it, and then we pushed up and made another leg on a lower time frame. All right, so are we going to respect this level here, this last down close before the up move, this last demand level here, before pushing up higher to take this liquidity and coming into the higher time frame level up here? Or are we going to push a little bit lower, sweep all the liquidity underneath these legs, and then have an overall pullback back down into sort of this zone in here, which I'll go into in a lower time frame? The reason why I say that, and let me just clear this up now. The reason why I say that is because every time we have an impulsive move to the upside or a leg like this, we always create a series of higher highs and higher lows normally. Okay, what happens is that if you don't understand higher time frame structure, what you'd think is if we come down in here, this will be breaking structure. Yes, technically it is on a lower time frame, but that doesn't mean we're going to be pulling back and going short. That just means we have to identify the higher time frame structure, which is right in here. So this is a higher high, a higher low. Excuse me. Yes, higher high, higher low. I'm right. Higher high, higher low in here. Higher high has been made. We cleared this high. Now we could be potentially looking for a higher low. This doesn't mean that if we break the structure, we're going to go short. This just means that we might have an overall retracement back down in here to test this previous higher time frame structure region before making another higher high. You can see in here that even though, we made a lower low here, a lower high, and a lower low, we cleared the structure. That doesn't mean that we're going to be going short. It just means that we have to look left and see, hey, where are the higher time frame structure points in relation to what's going on in here? Meaning, this is the previous structure point. Okay, we came into this sort of level here. Look at this. If I just drag this out, we came into that level perfectly. Many people were looking for a pullback and a short, but I was looking for a long. Why was I looking for a long? Because this is a higher time frame swing level. We came into that. Now, what you could have done technically is if we broke structure in here, which we did, I know it's kind of hard to see with these drawings, we could have pulled back, taken a short because we had room to go to the downside, down to this previous supply. Now, this isn't very clear, and I probably wouldn't have taken this trade, but you can just clearly see what happened in here, the reason why we pulled back and shorted off, and the reason why instead of pulling back and shorting off here, we just continued long and made a new higher high because we came into that higher time frame swing point. Okay, I know I just said a lot there. I know I'm talking fast. All right, if you have any questions, as always, please DM us and we'll be happy to answer them. You can pause this video and go back and rewatch it again. Okay, so coming back to over here, what I'm thinking, and I'm going down to the 2-hour time frame now. 2-hour time frame looks very, very nice. We have this last sell to buy. Now, just because it's the last sell to buy doesn't mean that it's a sponsor candle. All right, it doesn't mean that we're going to react off this level. The reason why I'm circling this level was because this is the last point of return. Last point of return before we go short, meaning before we break the higher time frame swing point and we become bearish. Okay, so I'm highlighting this region because we have a little bit of an imbalance right in here. Okay, this push to the downside did not tag this level. All right, and the fact that you could classify this right in here, this last doji candle from the wick, drag it over, we hit it to the T with this wick. So we have tested the prior swing point, filled in the gap, and now we're making higher highs, higher lows. What naturally happens is that we come back down and we test that same level where we initially tested before. Okay? So let me just get rid of this stuff here. We could potentially come back down in here. Now, who's to say we can't react off of this previous swing point? Yes, this is, higher high, higher low, higher high, higher low, higher high, higher low, lower time frame swing. We could react off of that, but we also could have an overall pullback. If we fall back below here, then we could potentially look to buy in here. If not, we don't reach this level, what could happen is this could just be a liquidity run. We may push down, have an impulsive move back to the upside, then we can take it off the pullback and continue long, look for the mitigation. Okay, I'm not going to get into exactly how we find the most precise entries and how to easily identify these, because this is for the course members, this is for the VIP members. So if you are a free member and you are interested in the course or joining our VIP community, please let us know. We'll be happy to help get you set up with that. But I can't go into everything because that would be unfair to the VIP students and the course students. All right, so I'm just giving you a broad kind of generalized idea of how we look at the markets here. All right, so kind of zooming into this level 1.35, I chose. We have a little bit of an imbalance here on our last last swing point within this smaller time frame up move, as we can see here, because simply what this is, as stated before, higher high, higher low. This is a trend within one singular leg to the upside. Okay, so as stated before, to reiterate, if we break this doesn't mean we're going short. It just means that we could be in for an overall pullback, looking for that higher time frame level, maybe taking a long from that level. Okay, so if you are a little bit too scared of entering here, which is acceptable, what you could do is simply wait for a reaction. So this would be our last point of return here. If we break this level, we are going to go short back down into this zone, most likely. All right, but if we have a reaction from this level, or even if we start to create a lower time frame counter trend, if we have a reaction from this level, okay, and we have an impulsive move, I will be looking to take it off the pullback. If we break counter trend structure, if we can clearly see the lower lows and lower highs here, and if we break this previous swing point, then I'll be looking to take it off of the mitigation to continue long. Well, let's just say that we don't do that and we just kind of trickle down. But if we have a strong reaction, any sort of pullback would constitute a long, in my opinion. Okay, because we have reacted off of that. Now we look for the candle of interest. If there's no specific candle of interest that clearly sweeps liquidity, maybe it just trickles down, then has a reaction. There's no candle that actually sell to buys, right? There's no candle that actually does that. What I normally do, and again, I'm not going to go into everything here, not the precise way of doing it that kind of, makes you enter precisely or with minimal drawdown and have a high risk reward every single time. I can't say that here because this is a free video. But normally, what I would do on a broad level would just be waiting for some sort of retracement into discounted regions of price. Again, there's some stuff in here that I can't discuss, um, or just some sort of imbalance, and then we can take a long. All right. So that is really how we kind of trade in a nutshell on a very broad level. Obviously, we get into more and more, I won't say difficult, but extensive material that's could be quite difficult to understand if you are a beginner. But it is very important in learning this stuff, learning the extensiveness of the strategy, because it can really pay you deep rewards. Okay, so that is what I'm looking for. Higher time frame, obviously, we should be coming back up into this level. Now, the misconception here is, let's just say that we make that higher high, right? And people may look for a pullback to continue long, which is okay. You're still keeping with the trend here. But understanding that this is a swing point on a higher time frame, you may want to slow down and look for potential shorting opportunities. That doesn't mean when it gets up into here, you should just short it. Okay, obviously you need to find a setup. But what I'm saying is, if we potentially break counter trend structure here after tapping this level, we could definitely be in for a short. So definitely look out for that. It's very important to do your top-down analysis with the multi-time frame structure, just like I did here. I'm only going to go through 3 pairs. I just went over GU. I'm going to go over USD CAD next, and then AUD USD. I'm not going to go over anything else. The reason I'm going to be doing this from now on is because we feel that just going over a few pairs to kind of give you an understanding of what you should be looking for is more important than going through them all and just kind of saying, oh, hey, well, we're looking for this, looking for that, looking for that. That's not really teaching you guys. Okay. So I'm just going to go over a few. And obviously, we do have the daily 50 right in here as an extra confluence. Obviously, we want to be trading long when we're above it, trading short when we're below it. That's just a confluence, though. Obviously, we should pair it with all our other confluences. But just because we're above it, just because we're above it doesn't mean we have to be taking it long. We have to be looking at other confluences and the entire structure as a whole. All right, going to USD CAD. What do I see here? Well, let's go to the higher time frames, a little bit of a top down. Let's go to the weekly. So the weekly time frame, we have equal highs. This high right here did not breach this high. These are equal highs. These will be hit eventually. Okay, but right now we are in a kind of a free fall here. The US dollar has been pushing down. I do expect higher prices on the DXY, but for now we are continuing to push down on USD CAD. Canadian dollar is quite strong, as oil is quite strong as well. All right, because oil and the Canadian dollar are tied. Canada is a major exporter and manufacturer of oil, so obviously those two, that commodity and that currency are tied together. All right, so we have broken this previous structure, but it's kind of weird. I would probably classify this as the structure point, because this is where we made a lower low, lower high, lower low. This is where we made our lower high. We're expecting a lower low, but we never got that. We made a higher high here. But we ended up pushing back to the downside very, very strongly, leaving this level of liquidity. Okay, so if we break the structure here, which could take months, so we're not going to be worried about that, then we could be going bearish. But if we don't and we respect the structure level, then obviously we are still bullish, because as you can see, we're a major, major bullish in here. Okay, higher high, higher low, higher high. All right, that's on a higher time frame scale. Scaling in, I want to be looking at this sort of level in here. And obviously, we are still in this downtrend, right? Lower low, lower high, lower low, lower high in here, lower low, lower high, lower low, lower high, lower low. Okay, so looking at what's going on in here, and now this may take a little bit for me to kind of go over everything that's going on, but it's very important you limit your pairs. Why do you want to limit your pairs? Well, you want to limit your pairs because it's going to help you in really understanding those specific pairs you're looking at. You look at all these pairs. I briefly look at them all because, I'm running a service, so I have to kind of go with all of my clients' needs here, because some people may be trading US 30, some people may be trading NZD/JPY, some people may be trading Euro USD. So I kind of have to keep up with them on a broad scale, but I have my own specific pairs. I like the majors. They wave well, and I just like trading them. All right, so I do stick to just a few personally. So I'm going to dive deep into this pair here. Okay, not too deep where I'm going to give away my secrets, but just enough where you guys can understand. So in this case, you can see this last up thrust here, this buy to sell. Okay, actually, let me go to the 30-minute. Probably better. 30-minute here, right in here. We can see this buy to sell, right? But that doesn't mean that we should be taking a short from here. Why? Because what are we doing? Higher high, higher low. This could easily just have been a higher high, right? But understanding that we did react off of this level and we pushed down and made a lower low, we can be looking to react off of levels. Excuse me. We can be looking to react off of levels in here, okay? Meaning, we had a reaction from this level. This is the swing point now. We broke this previous structure, made a lower low. All right. So what do we do here? Well, this really wasn't a clear supply level, in my opinion. Yes, it would have been fine to trade off of because you are just continuing with the downtrend here. But who knows? I don't think I would have taken a short from this level if price had pushed up because we were still technically bullish. All right. And here, we could have easily reacted off of this demand level here and then made a higher high. But we didn't, obviously. We kind of created some liquidity in here. All right. And we ended up making a lower low as compared to that swing point. So now we are bearish. Even though we knew we were bearish higher time frame. Let me just go out higher time frame. Even though we knew we were, right? Lower time frame, yeah, you could technically be bullish. Who knows? Price could have pushed higher up into here and tested something within this swing point here and then made a move to the downside. You never know. You just have to trade what you see, not what you want to see. Okay, going back to the 30-minute. So now we are bearish, higher time frame and lower time frame. So in conjunction with that, that's very good. Well, we created liquidity here. We finally had that push to the upside, that buy, and then we sold back to the downside. That buy to sell made that lower low. That's very important. All right. So not only did we take liquidity, test this supply level in here, but we made a lower low. So that, continuing with the trend, a lower high is expected. So we want to pull back up into that sort of last buying pressure before the downfall. All right. And we never really got that, right? We never really got that. We pushed up here. I thought we were going to come back up into here. I was really hoping we would because that would have been a great sell, but we never did. We created a lower low. But that doesn't mean that once we break this structure in here, that doesn't mean we're going to be going bullish. Okay, many people would think, oh, we broke structure, we're going bullish. Well, you have to understand what's going on higher time frame. Where are we in the legs, in the pullbacks in the legs? Okay, we are still higher time frame bearish. All right, and this could be a swing point that we could play off of, which it was. This was simply just an overall pullback, all right, before shorting off again. But many people would think that's a break of structure, and then they would have lost if they would have pulled back and then tried to buy it, right? So why did price stop in here? Well, it's because we came back up into this last buying volume that initially swept liquidity and came into that supply level, okay? Now, I break this down way more in depth, not specifically this pair right now, but we break this down way more in depth in the course. Everyone has loved our course. If you are interested in that, please DM us, and we'll be happy to help you get set up with that. I know it has helped a tremendous amount of people, especially those FTMO people who are looking to get funded. We have helped them a lot of them get funded, especially just with our course. They haven't even joined our VIP community and taken our trade ideas. They have just strictly traded on their own and passed their own FTMO based off of the material in the course. So congratulations to you guys. I'm so proud of you. I'm so glad that we were able to help all you people. All right. So we had this major push to the upside, this strong impulsive move. But what was this impulsive move? It was simply just a pullback, an overall pullback in the market, and a tap of this last buy to sell because they had to get out of these buy orders, which they did. They mitigated basically to the T. Okay, then we had a strong reaction back to the downside. We've been trickling down ever since. What did we do? We made a lower low as compared to this low here. Okay, so now what are we doing? Well, again, same kind of deal with this kind of structure. We broke structure, but not really. We're overall bearish. We broke structure here, but not really. We're overall bearish. I'm looking for price. Let me get rid of all this stuff. I'm looking for price, and I believe it's on the, may have been on the 30-minute. Yeah, this is the last buy to sell, so we could come back up into here around 1.2798, or about the 1 hour. It's about the 50% of this big move here. Really, this huge big candle swept liquidity, and we had a massive reaction to the downside. I do expect price to come up into sort of, I think it's the 4 hour level. Yeah, the 4 hour open, or the 4 hour 50%, which happens to be the 1 hour 50% and the 30-minute open here. So around these two price regions here. Looking for price to have a reaction from one of these two levels and then potentially shorting off to make a lower low to take out this low here. All right, so that's what I'm looking at, and that's what I'm looking for on USD CAD. It's quite simple, guys. If you don't see anything that's of interest, don't force anything. That's how you lose money. That's how you lose trades. That's how you get frustrated. That's how you over leverage, and that's how you blow your account. Okay, always stick to what you know and what you know works. Use proper risk management. I use 1%. Please do not go over 1%. It's just not smart. And then stay disciplined. If you can have that, then you will be successful in this market, even though this is a very tough industry. Okay, so I'm looking for that push up into that sort of level here, just around these price regions, and then we have sort of a pretty proven, I wouldn't say proven, yeah, I would say proven method to where if price is going to create a lower low from this level, or create a lower high and then another lower low, if we are going to push down from this level, then we do look for very specific things on lower time frames. And I'm not really talking about Wyckoff here, right? So obviously I can't go into that with you guys today. This is just a free video. Our courses and our VIP go in depth into this. All right, last one, AUD USD. I'm going to go to the higher time frame first. Weekly time frame. Okay, so obviously you can see we're in a downtrend. All right, obviously you can see we're in a massive downtrend. Let's go to the monthly really quick just to check. Yeah, okay, so this is where stuff gets tricky. And don't overcomplicate this, all right? But yes, we still are in a downtrend here, but this is on the monthly time frame. You don't have to wait for price to get back up into this sort of level before taking a short, because that could take months. All right, just trade, what you see, what the setup that you see on any time frame, because price does the same thing on every single time frame. But just understand higher and lower time frame structure, put that all together, and then formulate your highest probability setup. All right, but we can see here, and I'm going to start on the lower time frames first, because this huge thing in here that I'm going to go over would make better sense. So daily time frame, I'm going to scroll over here to our previous swing point. This is a lower low, an overall pullback, lower high, and then we obviously made a new lower low. Okay, we can see here that we did sweep liquidity, so I would consider this the structure point. So this is the higher time frame swing point, and now we're making a lower low here. We did sweep liquidity in here, just by a little bit, but it did, and then we fell back to the downside very, very strongly. Okay, so now this could potentially be our new point of supply around 0.8. Okay, new point of supply where price may come back up into before potentially making a lower low. Well, this is a higher time frame structure point level, the daily time frame. But could we be going long here and breaking this structure? Well, this is where you have to really start in the monthly time frame, because what's going on? Well, what do? We swept the low here. We made a higher high, a higher low, a higher high. Many people would think, oh, this is just a lower low. But in all reality, we never really closed strongly below this level. We sort of wicked it and then had a massive reaction back to the upside. We could be in for another push to the upside. I'm not saying we're going to break this high in here. I'm just saying that we could be in for an overall pullback before a potential short. Or, maybe we could just make another higher high. This could easily just be a liquidity run and then a test of this demand level in here. A higher time frame setup for a potential huge push to the upside. Okay, but that could take years and years and years. We're just focused on what's going on right in here. Okay, but just be conscious and wary of that, because this could be a possibility where we are at the last point of return. We took liquidity, we came into prior demand, and now we could be having an overall retracement or another leg to the upside. So this structure point may not hold. Right? We may break it, and then if we do break it and close above it, then we know any pullback could potentially be going on. Right? Scaling into the lower time frames, we still are above the daily 50 EMA. We are still in this uptrend here, and we do have room to go before potentially pushing down from these sort of levels. So I do want to continue to look for buys. All right. Daily time frame, there's really no structure in here. Lower time frame there is. It's kind of just one push to the upside, one singular leg. All right. Scaling in even more, 4-hour time frame. What do we find? Well, I guess you can classify these as swing points. So higher high, higher low, higher high, higher low. We swept liquidity, sell to buy, and we just pushed up ever since. We made a higher high. All right. But in here, higher high, higher low, higher high, higher low, could be looking to make a higher high. We do have relatively equal highs here on a lower time frame. So what could happen? Scaling in lower. We had this last sell to buy that swept liquidity before making the higher high. We came back down, tested that level, all right, and then we pushed back up to the upside. So that you could have traded that too. What did we do? We waited for the reaction. This was the structure. We broke the structure here, higher high, lower time frame, pulled back into this demand, and then you could have had, maybe like a 10 pip stop loss, and you could have had easily like a 1 to 8 risk to reward on that, just back up to equal highs. All right, so that was a potential trade setup there. So now I'm looking at sort of this level for a potential buy in here. Well, we did wick it. You can see the wick into this sort of level. All right, now let me go into, I think it's a 15-minute. Yeah, you can see clearly here. Look at this. You can see the clear liquidity run. Sell. Took liquidity here, tested that higher time frame level, that demand level in here. We teach you how to identify exactly what the demand and supply levels look like, so you know what you should be looking at once they come back down or up into those levels, and then obviously looking at how to identify not only the tests of the demand and supply, but how to trade from them based off of specific reactions. So I'm not going to go into that here, obviously. But we do go over that in the course in VIP. So continuing, 15-minute, just very broad, sell to buy here, last point of return. Did come into that, we wicked into the T. Now we still are in this sort of counter trend, downtrend here. Not saying that we can't push up. I'm saying that we are still bearish. Okay, these are swing points. We could make a lower low. The reason why I say that is because on a higher time frame, what could happen is we could, just like GBP USD that I went over, these are our higher time frame swing points right here, here, and here. So that we could be in for an overall pullback and then a continuation leg to the upside. But this could just be a lower time frame downtrend, potentially, even though we still are very, very bullish. So coming back down into here where we initially swept liquidity, lower time frame within this wick, there is a sell to buy. So we could come back down into here, sweeping all this liquidity here. All right, and then making a move back to the upside, testing that level and mitigating. The reason why we have trends within trends is because it's basically liquidity to be taken, right? So we have these swing points. People are trading within these swing points, right? Trading. All of a sudden, guess what happens? Bing, bing, all the way down. Strong move to the downside, sweeps all this liquidity, takes all that money, mitigates a higher time frame level, all right, and then makes a move back to the upside. The same could be said about this. What if this was a higher time frame swing point right in here or something, and these were lower time frame swing points in here? Well, what could happen is we could have an overall pullback into here and then a continuation. So you see how all the liquidity, higher time frame and lower time frame in here, can be taken. But understanding the structure is going to be your best friend. It's going to be how you prevail in this market. Okay? So going back to what we were talking about within here, could have that overall push to the downside if we do break this level. So what I'll be looking for is obviously just a trend back to the downside, potentially looking for a long from here, down in there, or simply just a sell to buy, strong impulsive move back to the upside, breaking counter trend structure here, pulling back and continuing, because this could just easily just be a sweep of all this liquidity here before continuing long. Or what we could do, and this is where you guys just need to pinpoint potential opportunities so you know exactly what to do when you see them. So this is why I'm going through all these different scenarios, because I don't know what's going to happen. Not even the best traders in the world know what's going to happen. No one knows, because if you did, you would break the market. You'd be a trillionaire. So, you just have to take the highest probability setup here. So that could happen. Those two options could happen, or something like this could happen. 15-minute time frame, we could open the market today and this was the swing point that we reacted off of here last week. We could easily, let me get rid of this. We could easily just have a reaction. This could easily just be a pullback, right, to test this sort of last sell to buy, because I'm sure there's a nice candle within these wicks, because what are wicks? They're selling and then buying at the same time. So sell to buy. We could come back down into that sort of level, test that level, make a move back to the upside. So I'm not going to take a trade from here. But if we do have a reaction from this level and we break this counter trend right in here, then I'll definitely be looking for a lower time frame reaction. Well, not a reaction, I'll be looking to place a trade off of a pullback after we break counter trend, because what do we do? Many lower lows, lower highs in here, all the way down, where our swing points here, and then if we fail to make a lower low, we have a reaction based off of what we know from these structure points in here. If we break that counter trend, then we'll be bullish. We could be taking a trade off of the pullback. So that is what I see on AUD USD. Kind of do the same things across the board, guys. Go through this in depth, right? There's no need to be looking at 20 different pairs, right? It's not going to help. You're not going to really fully understand what's going on, all right? So take time, do this on other pairs. If you trade other pairs like Euro, gold, I don't really trade gold. It doesn't really move the way I like. I like the majors, any like XXX USD pair or USD CAD, I like those. And then some crosses like CAD JPY, I like Euro JPY, I do like. Maybe some days USD Chef when it's not making me mad. But yeah, just kind of do this across the board, guys. Do it on your pairs. Do top down. Take some time to do it. Because if you just go through it within like 10 minutes, you're really not going to understand what's going on. And if you are a beginner, it's okay. You may not know what's going on, even if you do take time to do it. So it just takes practice. I've been doing this for I think about 3 years now. So you just kind of start to see these things over time. And like I say to my members, trading is kind of like riding a bike. You keep falling and falling and falling at first. You think you'll never get it, then all of a sudden, bang, you got it. And you never fall again because you know how to do it. Your brain is just wired and you just naturally know how to ride a bike. So I'm not saying it's going to be that easy once you get the hang of it, but it'll be a lot easier from your original starting point. So that's all I got for you guys today. Hope you guys enjoyed the first Smart Money Sundays video of the 2021 trading year. As always, if you have any questions, please feel free to DM us on Telegram or IG. We'll be happy to answer any of those. Even if you're not a member, you feel free to ask any questions you may have. But if you are looking for more in-depth education in exactly how we trade with these precise entries, going into way more in depth than what we are just talking about in this video, please DM us and we'll help you get started with our course or our VIP community. All right. So have a great rest of your day, and we'll speak to you guys soon. Thanks.